Helen Cooper. I gotta say, you take the first spot as the guest with the coolest name I ever had. So
Thanks, man. I'm excited to be here.
I'm excited to meet you here online. It's funny how I meet people all over the internet and the interesting projects that they do. I've seen you post on LinkedIn and I've seen your project, and it was so fascinating to me. And it's definitely something that I was always curious about. Real estate plus on-chain events and crypto. So that's a pleasure, true honor to have you here, sir.
Oh yeah, yeah. Thanks for having me, and I appreciate all the listeners tuning in.
Yeah, absolutely. So you are a CEO of Rhove, and you're also a CEO of Tokr. And let's just start from the beginning. Rhove, and it's a Rhove related to real estate investing. And I just wanted to ask you about that. What does Rhove represent, and how that came to be, basically?
Yeah, it's really important to just zoom out and forget all about technology. Really, technology doesn't matter to most people. What matters are the experiences that we're enabling. So imagine a world where every renter is an owner, right? Today's real estate market is inherently unfair. The average young person will never own their home. A growing portion of us don't plan to ever buy. And at least in America, it's cheaper to rent than to own in three-quarters of US markets. And you're going to spend hundreds of thousands of dollars in lifetime rent, but have nothing on the other side to show for it. But that's not right. We need to build wealth, and real estate is important. It's where we raise our families. It's inherently social and political. And so that's what really inspired us to start Rove. It was so that I could own a piece of the apartment that I live in. But building a liquid real estate market enables so many more experiences. Like, imagine if Africa's middle class could hedge inflation by investing in New York real estate. They're underbanked and underserved, but there is a growing middle class there that needs access to financial services. Or imagine if you're Colombian, and when there's a change of government, there's political turmoil. What do rich people do? They call their broker in Miami and they buy real estate. But what do middle class consumers do? They don't have that kind of access. And so imagine a world where you can use your Phantom wallet, click a button, and invest in Miami real estate. That's the future we're creating.
Wow. To be honest, based on the research I've done, like I didn't catch that moment, and that's actually amazing. When capital reallocates during turbulent times, you're absolutely right. The rich people, they like invest in a bunch of real estate. Like there's a lot of Chinese investors in Toronto, like bought up the whole apartment buildings. But yeah, what do other people do, like who don't have so much capital, who don't have like 500,000, $1 million to get like a condo here in Toronto or something like that? And same with the United States, it's wow, I haven't even thought of that, but that's true. That's very attractive. Because my question to you was, how is this different from let's say a REIT, for example, this idea, and it's just the idea of requiring smaller amount of capital to enter the
Well,
market.
a REIT, you're buying a basket of goods. And if you think globally, a lot of consumers don't have access to REITs. They don't have the same kind of access we have in like Canada or the US to high quality REITs. But real estate is more personal than that. This is about investing in individual properties. So owning the places that you're connected to, like whether that's an apartment building that you live in, or if you want to co-invest with the property owner that has developed the building you're in, or if you're part of a digital community and coming together and backing the types of deals that you believe in.
Let me through example of owning an apartment that you're renting. How would that work, and what's so special about it?
Yeah, what's special about it? Like, why do people buy homes, right? Especially why do people in their 20s and 30s want to buy a home? We get that it's inherently unfair that we're living here, adding value, paying rent, but don't own a piece of it. And when you do the math, it becomes really clear that wanting to own a home or a condo doesn't make sense for most people. Like, unless you need a house with three bedrooms and you plan on living there 5, 10, 15 years, it doesn't make sense to buy a home. But you know what also doesn't make sense? And let me double click on that. It doesn't make sense to buy a home because it's more expensive. You're spending more money every month than is necessary. It's cheaper to rent to own in many markets, and you're taking on the responsibility of maintenance and
Oh
taxes,
yeah.
and insurance, and other headaches. And further, you're taking a step back in amenities. There was a lot of apartment buildings developed in the past decade, but not many condos or single family homes. And so we've gotten used to granite countertops and gyms and walkable neighborhoods. But then you've got people thinking, I'm an adult, I need to buy a home or a condo. And you take a step back in the experience to do that, and you pay more. And you don't actually end up making that much money. Like the gap between renting and owning, like if you would have saved the money and invested it, you would have been better off financially in many cases. And so that's like the third option, right? The alternative is you could rent, spend $200,000 in lifetime rent as a millennial. Gen Z will spend more, and this is a lot more than previous generations. And at the end of the day, what do you have to show? You have no equity. So the cities are getting built around us. Everybody's making money. There was a $60 billion transfer and housing grab from
Hmm.
from Main Street to Wall Street after the last recession. And we haven't seen anything yet. There's trillions of dollars of dry powder that private equity funds and other investors have. They're just on the sidelines waiting for this next recession. And they're going to buy everything up.
For cheap. Yeah, and I so agree with you on the whole thing. It's a lot of social pressure on, like people my age, like the millennials, for example, to get a house just for the sake of like getting a house and saying like you have to own something. Yes, I agree. Owning is better than renting. You do get equity and all of that, but isn't opposed to like you're not just paying rent, but you also get something in return. But in the current market conditions, especially with interest rates are going up right now, the actual mortgage is just so expensive right now. What you could have like get for $600,000, you will pay right now the same amount in mortgage monthly payments for something that is $300,000. So like the value just decreased. So the access to that is so minuscule right now, and you
Yeah.
get this giant debt over your shoulders for 30 years, and you just have to like hope that you can figure this out, and by the time you're 60 or 65 or 70, you can finally like show up with this. And
Right. And my grandma's 83 and she's still underwater on her condo. Like, not all real estate goes up. So diversifying is kind of a good idea.
right.
And why do we need more debt? Like, you've got student loans, we should have a debt-free world. You're trading your freedom for what? Like, we need more liquidity and flexibility in our lives. In the future, your status and making it won't just be measured by your net worth. They be measured by the degree of flexibility you have to arrange your life to fit your needs. And that's freedom and autonomy. One really good book for listeners that you might want to check out is Sovereign Individual.
Oh, I just read it. Oh my God. That's so funny that you mentioned it. Oh my God. I read it like a month ago. Wow, I love that book. The way how they predicted stuff, and I'm gonna let you talk about it. Please go ahead. I'm just
I
like,
mean, in '97, they're talking about
oh my
a
God.
cyber money economy being enabled by crypto technologies, and this multi-trillion-dollar cyber money economy is gonna create so many new experiences and so much more freedom for people. And here we are, right? We now have $1 trillion cyber money economy. Moreover, they predict that it's this technology, open ledger technology, is going to make all illiquid assets liquid, right? And when you do that, we're going to have more flexibility. We can decouple like um, like different aspects of renting and owning, like a la carte, and choose what works for you.
Exactly. So like in your example, in your company's example, instead of me trying to purchase a freaking house for $800,000, I can at least start with owning 50 different houses and only invest like as little as like, I don't know, whatever, like little amounts, but like I can invest like $20,000, but at the same time own 30 different houses, like pieces in 30 different properties, basically.
Right. And the property you're in, and the one across the street, the ones you care about,
Exactly.
that
To
you're,
support
that
neighborhoods, communities. Yeah.
you have a connection to, right? We all feel, we look out the window, there's a crane going up. We're like, okay, that's cool, man. Okay, that's great. Real estate prices are going up, and if you're not a homeowner, there's this feeling inside of you, right? What's that gap of like,
Yeah,
well,
yeah.
I wish I could own. We pull up Zillow and we look at window shop, um, but what if you could click a button and invest at that point? That would be really cool. And so you can scratch that itch of ownership without having to take on debt. And then the future is even brighter. So imagine you don't just invest hundreds of dollars. There are going to be property owners that create a whole new experience for renters that competes with home ownership itself. So instead of taking, all your life savings and putting in one asset, you could take like 10,000 to $10,000 and invest. Now you've moved up the ladder of commitment. You could
Yeah.
commit more time and say, all right, I'll stay here for 3 years or more.
Hmm.
And then maybe you can lock in your rent payment.
Hmm.
So we don't need government to have rent controls. The private sector can create a solution. So you can lock in your rent. You can now, let's say you've got even more in, you can now have more agency and control over your space. You can paint, you can upgrade things. It'll feel very much like a condo. That's the future. And what we're doing right now is just like the beachhead. It's just the first
Hmm.
step. But the future is, it'll be ridiculous to have a 30-year mortgage. It'll seem archaic.
And in my gut, I fully agree that having a 30-year mortgage and actually being proud of, this giant debt over your shoulders for the prospects of this huge like equity payout at the end when you're old, it does sound a little ridiculous in our day and age when you're basically democratizing the real estate market and you're spreading the wealth basically across the people. And I think that's truly revolutionary. But at the same time, it just makes so much sense. I think people can understand this aspect and they can be proud. They can go show like with their friends to the neighborhoods like, oh yeah, I own piece of this, I own piece of that, I own piece of that. Like that goes without saying though. It's not just owning it; you also are getting a return from it. Is that correct?
Yeah, yeah. So there's a reason that institutions and family offices, high net worth individuals love investing in real estate. You earn distributions from rent payments. And then since you have equity, if the property appreciates in value, then you have a capital gain. The problem for them too is that private real estate is illiquid. So they'll invest $1 million and it's locked up for 5 years. The future is brighter for them too. It'll feel like Robinhood or Coinbase. You can
Hmm.
buy and trade shares at a granular level. And that's really what technology is for. You saw Elon Musk tweet this, but this is an economic principle. It's not unique. But like money is an information system.
Hmm.
Okay. So liquidity is an information problem. The problem is that you have unique supply of equity. All the terms are in DocuSign in somebody's inbox at best. Um, and people are sending wire transfers. You have a capitalization waterfall spreadsheet that's in Excel, Google Sheets, or maybe a cap table management system, right? So it's not visible, it's not interoperable, there's no standard data structure. And so if you have $100,000 equity position in an apartment building across the street because you're rich and you have that access, and you can participate in a country club race, as they call it. There's no way for somebody in Singapore to know that you're willing to sell $10,000 worth of your position. There's no
Hmm.
way. And
Hmm.
there's no easy way to execute that trade. So the future just automates that. It's like a global programmable spreadsheet. You just program the equity. And then now you can enable new experiences with liquidity. And so building a liquid real estate market is so important for many reasons. It creates a more capital efficient market for LPs. It lowers the cost of capital for property owners because if an asset is illiquid,
Hmm.
it's discounted, right? You have to pay a premium for that capital because people are locking up their money for some years,
Hmm.
right?
But
So if it,
right,
and then for consumers, right, it allows you to create more experiences that matter to us.
yes, and so the everyday joke and basically invest certain amount of his savings into a property, but still then can get return based on, like, let's say it's a condo building or something, on its rent. How is the building cash flowing? Yes, it is. And if it's cash flowing, the net being allocated through, let's say, the holders of that equity, through tokenomics, for example, in
Right.
something that we're going to talk. So that you do,
Yeah.
it's a passive income formula as well.
Yeah. So basically, today you don't own real estate; you're just paying somebody else's rent, and that's not fair. So, what is Rove? Rove makes real estate more fair. We're giving access to everybody so that we can own the places we live, work, and play.
And it's so funny you've mentioned that, capital would fly to, during turbulent times, capital from rich people would fly to, developed countries such as United States or Canada or Europe or something like that, where it's more safe. But at the same time, as a retail investor, for example, perhaps I do want to get a piece of Singapore. Perhaps I want to get a piece of, developing countries that are, where the returns are much higher because of, everything's growing faster. And all of a sudden, and correct me if I'm wrong, but it sounds like this can be in the formula as well, where you can figure out, other markets outside the United States in the world, or you mentioned, different continents and all of that.
Can it be as easy as looking at Zillow or going to Google Maps and clicking a button and investing?
That's fantastic. How did you come up with this? How did you come to this idea, and where did your entrepreneurial um journey started?
Yeah, so I just wanted to own a piece of the apartment building I lived in. It's that simple. But I'm a nerd and I do the math. I didn't want to buy a condo. It doesn't make sense to me. So dating somebody and he's like, we should buy a condo. And I was turning 30 and I was like, why? Like, are we gonna live there for 5 years? We're not gonna reach the break even point. I did the math, and it's gonna be more expensive, and the experience is gonna be less than where we live. Why would I want to do that? And I work a lot. So like have no desire to do anything with maintenance. And we don't have kids. So we don't need the school district or anything. So I just not gonna do it. It makes no sense. But I also want to own real estate. Have to. I want to. I volunteer in our city. I like to give back. I care, and
Where are
I
you from?
want to own. I
Oh,
grew up in Columbus, Ohio.
oh,
And so
cool.
I'm like, I just want to own. And also I want to invest in the community with time. But then why can't I invest capital and get a return on investment and a return on community? So I'm like, I just want to be able to own a piece of this apartment building as easily as I can click a button and buy Bitcoin or invest in Apple. And I was just ranting and raving about this, and I met Brett Kaufman. He owns Kaufman Development. He's a major developer in our region in Columbus, where I grew up. And in Columbus, it's a fast growing city. So like Intel just built, like they're building the largest chip manufacturing plant there, and there's a bunch of stuff happening. A lot of people may not be aware of, and so it's a really dynamic city. I'm working in venture at the time. And so I have this thesis. I'm like, the future looks really different. It's crazy to me that the average person can't own real estate. Brett cuts me off 5 minutes in the conversation. We're sitting in his office, kind of just having a coffee. And his office is really cool. He's a very creative person. So if you look at Columbus's skyline, the latest skyline, if it looks cool and it's downtown, Brett probably built it. So
Wow.
he's just a cool thinker. So Brett cuts me up. He's like, I agree. You should quit your job and start that company. And if you do, I'll invest. And I'm like, what am I gonna do with 100K? I'm gonna run out of money. Why don't you invest? I'll lead the deal. I'll get the partners to invest and I'll join the board. And he's like, nope, if you aren't the CEO, I'm out. You got to have somebody passionate about this. It's going to take longer. It's going to be way harder than you think. And so I slept on it and I'm like, I have to do this. I mean, it's more important to me than like any problem to solve. Like I have a chip on my shoulder about this specific industry. My mom lost her house in the last recession. My grandma's condo is underwater. And the market is just crazy. We need
So
to
you
change it.
needed to stop that cycle.
Yeah, absolutely. And my great grandmother, Robin Weaver, my dad's grandmother, She was a Black woman in the 1960s when women alone couldn't do business, right? She was getting a
Right.
hard time for being a real estate agent then. She would rent properties out to people. None of that like trickle down. I grew up in the inner city, but I did inherit the knowledge and the stories. And so I'm like, okay, why don't we own real estate? And the way we own it is dumb. This needs to change.
Wow. That's amazing, especially like the fact that you just pitched it to your partner and to your investor, and he just believed in you. But he also insisted that you put your own skin in the game, and you not just sit on the board and just advise that you actually have to operate. You have to go there and hustle. That's just I don't know. This is great, and this is great. It shows great amount of trust and shows how much success you had so far. And he did the right choice.
Yeah, I mean, he was right in hindsight. Like, you should never start a company just because you're like, oh, I want to be CEO, be my own boss. That's not true. Like, when you become a CEO or you start a company, that's like having a kid. Like, that is your number one priority. And then second is you. Like, there's nothing else. It consumes you. And it's hard. Like Elon's right. He's like, it's like chewing glass, staring into the abyss. It sucks. Like, what keeps you going isn't money. There's easier ways to make money. Like, what keeps you going isn't like freedom. You are tied to this work. It's a hard problem to solve. What keeps you going is inspiration, love for the problem, and the need to create a new reality.
Wow. I'm inspired just by listening by that, but at the same time I'm a little scared because you do say like it's not like an easy process, and it's definitely a bumpy road. But you know, as everything in life, you know, if you want to achieve something great, you have to go through some hurdles. Switch a little bit, or like go further to Tokr, and what is Tokr and how is it connected to Rhove?
Yeah. So in the beginning, we're talking about okay, and this is an information problem, right? Liquidity. So technology matters, and open ledgers, like when you make the cap table programmable, interoperable, um, then you enable new experiences. It just so happens that we call this open finance technology, um, blockchain technology,
Hmm.
right? So people get way too caught up with the words, blockchain,
All the
crypto,
buzzwords, yeah, yeah.
tokenization, but none of that matters like to the average person. And so the reason when you go to the Rhove website, you don't see anything about, we don't talk about technology. It doesn't matter. So we just came up with another name. It just means tokenized real estate, for the open source technologies that we're building and some of the underlying things we're doing under the hood. We'll probably end up calling it Rhove Protocol anyway. But like, it's
Uh-huh.
a distraction. It doesn't matter to
Right.
people. But I will mention this. We were one of Solana's Riptide Global Hackathon winners in the spring. So we got a small grant from the Solana Foundation. We're building some really novel things. But what would be food for thought for the listeners is this: tokenizing real estate doesn't make real estate more valuable. Tokenizing real estate makes crypto more valuable.
Hmm.
And what I mean by that is tokenizing, like the intrinsic value of real estate is the net present value of cash flows. That's it. So if you make it more liquid, you don't really change that. You might make it easier to realize the intrinsic value. You don't have to discount it or, you know, pay for a broker and pay fees, right, to exchange. And so there's value there. You might lower the cost of capital, and that'll increase the value in some ways. It doesn't really change the intrinsic value, though. And it may enable more things to get financed. Banks are really like in the box, and
Hmm.
the capital markets are more creative. And so there's value to real estate. But the reason tokenizing real estate assets today has failed is people go into it with the wrong premise and intentions. They're shilling, they're like, oh, it's tokenized now, as if it should trade differently and in
Hmm.
irrational ways. Um, But the second part of that statement, tokenizing real estate makes crypto more valuable. Here's the thing, you know, sovereign individuals are good read. But now we've got this cyber money economy. So now you have financial services for that crypto economy. This is called DeFi. People are lending and borrowing against crypto assets. You have some Bitcoin, you're crypto rich and cash poor. You can wrap it, deposit it in a DeFi protocol, and borrow against it. So deposit 100,000, borrow five worth of wrap Bitcoin, borrow $50,000 in stable coins. Now you've got some liquidity, right? So you also have institutions who hold Bitcoin. You have ETH and other crypto assets. You have people who want to generate some yield, right? It's just kind of sitting on their balance sheet. And so how do they do that right now? They generate yield from lending and borrowing against crypto assets. Mm-hmm. Now, with this latest crypto winter, DeFi protocols were really resilient. They were stable. They held up. The technology worked. But it could be more anti-fragile if you weren't just lending against crypto assets. Because when crypto goes down, then all activity flutters. So there's a growing demand by crypto organizations like MakerDAO. So Rune just put out a proposal, and others who want to lend more and generate yield from real world assets like real estate. So there's
against tangible stuff in the real world. Not just some.
So the crypto economy, for it to be really robust, is gonna not just mirror but exceed the current financial system. And one piece of that is lending and borrowing against real assets. So now you have a growing capital market of like people who are like, I want to deploy capital into real estate. But in order to do so, you've got to structure the data in a certain way and build a protocol for that. And that's it.
I think this is great, and it's I'm sure like for people who for uninitiated, I would definitely suggest looking into DAOs, looking into different Solana projects and other projects as well. But I do see this trend. In my gut feeling, I do agree that it's the time for hype and the time for just like pumping something and then dumping is I think it's over. People are becoming smarter, and I, as an investor who wants to be a part of this decentralized world, who wants to have piece of action, but I also want to have some safety, and I want my investments to be backed by real stuff, not just by some protocol that hasn't been proven by time, but I want to make sure that there's land behind it. I want to sure that there is buildings behind it. I don't want to say, cash, because again, that just goes against the whole philosophy of, cryptocurrency and all that. But yeah, real stuff is there. This is where I feel confidence. You've mentioned sovereign individuals several times. I was wondering if you are familiar with Balaji Srinivasan and his latest book, The Network State.
Yeah, very inspired by it. Like that and his essay on mirror tables. Like if, for other people who are really interested on how to actually make this happen. He wrote an essay on mirror tables and how to program equity investing in the startup world. But we're applying that same kind of framework to real estate. That's actually what we were one of the Riptide winners for demonstrating. But what is a network state? A network state is really just an online community that has the capacity for collective action, but uses that to crowdfund territory, land around the world. And he predicts that eventually these communities are going to gain diplomatic recognition from pre-existing states. It's really fascinating. You're already seeing social networks come together in powerful ways, and with moral innovations inspired by a certain vision, and deploying capital to see that come to fruition. And we're in the early stages of that, and you're going to start seeing these communities start to buy land and create experiences in their tracts of land all around the world. So essentially, you'll have like a decentralized jurisdiction, so to speak. And it's going to be really cool.
Yeah, and I'll be honest with you. This is something that keeps me moving for the past several months. Ever since that book came out, I'm familiar with Balaji for a long time, with his work and all of that. But once I read that, and I'm still kind of rereading some stuff, and I'm actually doing a series of podcasts on network states. I already have 2 episodes that will be published.
Nice.
I'd love to have you on as a guest to just talk about network states as well, since you're so close to the subject, and you're actually again putting skin in the game, and developing something in real world that can be actually utilized for a real network state. Uh,
Yeah, we're like putting all the pieces in place. Like by default,
exactly.
every app user with Rhove has a Solana account. And we built an integration with Web3 Auth. So we don't have access to your private keys encrypted on your phone, but you have a Solana account, even if you don't choose to link your Phantom wallet. And we're starting to like create interesting experiences with that. We just announced a cool activation with Bears Reloaded. And so members of the DAO with the NFT, when they
Uh-huh.
link their Phantom account, they get access to a really cool experience. But we're going to announce another one that's pretty big. But the underlying core technology pieces, that are in place that we're building, and the user experiences on the front end, that crypto fiat interface, and then the compliance infrastructure with which to actually buy and own land. Like all of these are the key pieces of the puzzle for people who have a moral innovation to activate on that intention to buy land and then make it happen.
Wow, that's just fascinating, and I really hope we can stay connected and talk more about this in the future episodes, Calvin. Thank you so much. I really appreciate you being on the pod, and this was an amazing conversation, and I'm very inspired by it.
Appreciate it. Likewise. And thanks to all the listeners tuning in. Check us out, rhove.com, RHOVE.com, and follow me on Twitter. Love to interact.
Thank you so much.